Fundstrat Global Advisors Head of Research, Tom Lee, joins us on set today. Hi, Tom.
Hello.
So based on what Taneo was describing with regard to Bitcoin, what do you think that this most recent rally says about the overall risk appetite in the market right now?
Well, it's really telling us investors are pro-risk. I do think it also just signals how much capital has been idle for the last couple of years, either parked in money market cash or waiting to see if the economy survived. So I think Bitcoin rising is to me, breaking out of a holding pattern is a precursor to what the S&P is going to do the rest of the year.
Speaking of the moves in the broader markets, you say the road to 6,300 is paved with bumps. What do you expect investors to see ahead that may slow them down? What are some of the key markers that you're looking for?
Well, I think there's a lot of macro to digest the next 3 weeks. Tomorrow is the jobs report, and I think investors are fearful that it's going to be too strong because of the hurricane and seasonal adjustment, so it's going to be a big number. Next week is CPI, which has been running a little hot, and Fed Chair Powell spoke about that earlier this week. And then, of course, on the 18th is the FOMC rate decision. So I think once we're through these events, investors can actually then invest into sort of that Christmas Santa Claus rally. So I think 6,300 is still very doable.
So you're basically saying don't go away after the 18th because there may be some additional upside toward the end of the year?
Yes, or buy the dips, yeah.
So, you suggest there that we're in a good news is bad news for stocks environment. Why should the market be concerned if the Fed is going to be less aggressive in terms of cutting rates?
I think there's a conceptual change that the market has to get used to, which is, let's say earlier this year when the Fed started cutting, people thought, 5 cuts is good for stocks in 2025. So if the number gets reduced, it's bearish. I think as we get into 2025, the market's going to shift to thinking the fewest cuts possible next year is the best case because it elongates the dovish cycle. So I think we have to flip the script, but it's going to take some time.
But hasn't that been the case all year? Because in January of this year, the market was implying 6 or 7 cuts. We're only getting a few. We've slowed the pace. The 2-year yield is not that far below Fed funds anymore. So I guess my point is the market's already kind of registered that slower is better.
That's right. I think it's, I would just say it's not a consensus accepted view because, for instance, when Fed Chair Powell spoke about taking things a little slower, the market got weak and then maybe had a rethink. So I think it's going to take a while until markets realize one cut next year is actually quite bullish.
Are you surprised that equities haven't reacted to some of the political turmoil abroad, South Korea, France, elsewhere?
In some ways, I think the stock market had been already pricing this in because, as you know, this year has been a pretty significant divergence between U.S. versus Europe and U.S. versus emerging markets and even China's sort of failed rally. So I think in some ways the market's not surprised. Maybe it was even pricing in this through currencies and equity prices.
Tom, I'm going to go back a long ways to our long relationship. Do you still even track active managers and how much, they're trailing their bogeys at all, and whether that's a factor in any way at the end of the year?
Yeah, in fact, we've been cleaning up that data because, as you know, in the last 10 years, there's been a big change in the number of managers. It's good. It's kind of a good and bad year because active managers that tactically went cyclical or more offensive or tech have been having banner years. We have so many clients that are beating their benchmark by 6, 7, 8. These are unheard of outperformance, but it's a small number because, as you know, when you look at the world more towards macro or market neutral, it's been very tough.
The financial world is buzzing with news that is nothing short of electrifying. And if you haven't caught on yet, it involves the cryptocurrency giant, Bitcoin. The stage is set with a dramatic shift in the U.S. political landscape. And everyone is asking, what does the Trump administration mean for Bitcoin? While whispers and speculations flutter through Wall Street, the focus hones in on Silicon entrepreneurs like David Sacks and figures like Elon Musk, who stand at the forefront of this crypto revolution. With Trump's economic strategies poised to create ripples, the future of Bitcoin looks ready to redefine itself, possibly achieving unprecedented heights. Let's dive deeper without delay, for the tides are quickly changing and you won't want to miss out. Welcome to Investocracy Crypto.
I teased Bitcoin because I have no idea. I don't know what it's trading on. Maybe, I don't know what you think it's trading on now. The ETF, obviously, that was something. Usually it likes the Fed to ease, so you just said some positive things about that maybe for more printing. But I said, and I was just throwing out a number. We're at 50. I said, what you said it might be strong for the remainder of the year.
Yes.
I said 75. What did you say to me?
I think it's, could be as high as 150,000 this year.
So double what I thought was.
Yeah.
150,000. So we're tripling at this point.
Yeah, because you've got demand improving with the ETF, and you have the supply shrinking with the halvening. And if monetary policy eases, which we expect, that's supportive of risk assets. And Bitcoin's holding up. I mean, that's another reason why I don't think a drawdown is going to start that soon. I mean, Bitcoin's been rallying the last couple weeks.
Wow.
So
take that to the bank.
Those are big numbers. I don't know anymore.
And are you in, hold on, let me just go back. Are you in the camp of this is like a $500,000 valued? Over the next... Over 5 years, are you?
Yeah, it is sound money. And I think it's proving to be useful. And
proving to be useful how?
Well,
it's very useful if you're an investor right now.
Yes, it's been a great store value. It's been a good risk asset. It's also incredibly secure. There hasn't been a single fraudulent entry on the blockchain since inception. I don't think any bank can say that's true of their P&L and accounting. 6% of banking transactions are suspicious, 0% on the Bitcoin blockchain.
What did Gensler say the other day? That he trusts the Oracle database more than the blockchain distributed ledger. Does that? That was bizarre, wasn't it?
Well, I mean, the blockchain is just one big piece of software, but I would trust the proof of work concept that you now, instead of having 5 people manage an Oracle database, you have a consensus mechanism, and that's what's
exactly. Bitcoin, the cryptocurrency that has captured the imagination of the digital age, seems to be riding atop a wave that knows no bounds. As the dust settles from the November 5th elections, Bitcoin's price skyrocketed beyond a striking record of $106,000 before leveling at approximately $105,000 in Asian markets on Monday. The excitement emanating from Trump's camp cannot be overstated, particularly with whispers of a potential national stockpile of digital currency, an initiative reminiscent of the Strategic Oil Reserve. Imagine if U.S. reserves were banking not just on physical commodities but digital wealth. Could this be the next American financial frontier? Strategists like Peter McGuire of XM.com vocalize the sentiment sweeping the markets. Nothing quite stirs the pot like a FOMO rally. As traders clamor to seize the opportunity, many are betting big, eyeing $120,000 in the near term and staggering predictions that forecast over $150,000 by mid-2025. Of course, the involvement of personalities such as David Sacks, a former PayPal executive, only adds fuel to this fervor. Aligned closely with Trump advisor Elon Musk, Sacks is stepping into a new role that blends artificial intelligence and cryptography into the federal mix.
Well, one is seasonality. December historically is a strong month, but when you're up more than 10% in the first half and it's an election year, December's been up 100% of the time. The second is yields have moved down to pre-election levels. The 10-year's at 4.1. That's good for multiple expansion. The third is, I think it's been surprising, but sentiment's actually turned negative the last 2 weeks, even as the markets rallied. To me, that's a contrarian bullish signal. And then finally, we still have those 2 puts, the Trump put and the Fed put. And I think that means you still want to buy any of these dips.
What can Trump do to make sure the market keeps going up?
Well, I think we've seen it with how he's made cabinet proposals or nominations, that he's very pro-business. And I think, as many have said, Trump is very focused on the stock market. So I think communication is still a strategy, and it's a reminder that animal spirits could come back.
I don't know if you watch the way the financial, say this tactfully, I don't know if you watch the way the financial media industry covers tariffs. I mean, how can you call him pro-business, according to these people, when he's pro-tariffs? Because you would just think, if you watch the coverage of tariffs.
Yeah, I mean, to me, it's a reminder that it's good to carry a big stick, and I think tariffs have proven to be a good negotiating tool. I think we've seen some proactive actions by other countries. And in general, I don't think the new White House wants to pursue any policies that would hurt corporate profits. So I think ultimately whatever is accomplished is going to be pro-business.
Adding another layer, Washington's regulatory landscape is witnessing a dramatic shift. Announcing a new SEC chairperson, Trump has tapped pro-cryptocurrency attorney Paul Atkins, while current chair Gary Gensler graciously prepares to step down. This political chess play corners the focus on cryptocurrency regulation, or perhaps lack thereof, and its implications for decentralized finances. With Gensler's past legal actions against crypto firms stirring up controversy, Atkins' nomination is being read by many as a clear sign of the times ahead. Wading through tweets, opinions, and skepticism, the golden Bitcoin rally isn't just a phenomenon. It's a narrative of transformation, where economies and ideologies converge. With Bitcoin dissecting traditional financial silos, this unending uptick tantalizes investors. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I mean, a lot of people would take any spending they can get, whether it's government or otherwise, for an economy, for juicing the economy.
Yeah,
You think it would go into private if it's not spent by the government?
Yes, that's right. I think that would free up money because this is, money, the capital that the government spends is competing with private sector money. I'd rather see the private sector invest this money at a higher rate of return. So I think overall it'd be positive for GDP and profits and for equities.
Do you want to, we always get a Bitcoin comment from you before we let you go normally. It got stuck under 100. That's a pretty, it's a psychological level, I would imagine.
Yeah, I think some of this could be, there's a lot of folks who don't want Bitcoin over 100,000, and some of it may be the exchanges themselves are concerned because there is a pretty low supply of Bitcoin available over the counter. So you have a supply shortage, and if Bitcoin makes a move above 100,000, I think there'd be a big chase. So I'm still confident Bitcoin's going to close much higher before year end.
Before year end?
Before year end, yeah.
So break $100,000 before the end of the year?
Yeah, well above 100,000 before year end. It's just a matter of time.
It's December 2nd. It's not that long, Tom. So it's going to do it in the next 4 weeks.
Tom makes bold short.
I know.
In today's unpredictable market, it's rare to witness an asset that not only defies expectations, but also disrupts the status quo of financial orthodoxies. Bitcoin stands as a testament to this paradigm shift, enticingly poised at the edge of exponential growth. Reflect on its current position. It has torn through a 50% increase post-election and hints at even greater future returns, a prospect buoyed by Trump's crypto-friendly policies and announcements. Should you choose to capitalize on this moment, remember, investing in Bitcoin today isn't merely about transient monetary gain, but rather a ticket to participate in an evolving digital economy. As analysts posit $120,000 by year's end and foresee greater potential by 2025, the opportunity is ripe with promise. So, as you gather your thoughts on this daring digital frontier, consider this. Do these winds of change align with your financial compass? We invite you to weigh in with your perspective. After all, in the monetary stories we weave, your viewpoint is a pivotal chapter.